Good afternoon, traders. This is Sergeant Zanawi. Welcome to our live analysis on date 19 of August 2021. This is the first live analysis that we're doing, and we will be doing an explanation of our analysis on the major pairs and gold. And we will start with British pound against the US dollar and on the 4-hour time frame. And what we're looking at today on this pair is the market is in a correction. We're looking at this correction, how it will unfold, or how far it will go, how deep it will be. And the reason why we think this is a correction is because we had an impulse on this side. And after impulses, what comes next are the corrections. In this case, we have a complex correction, which is a double. We have the first ABC, we have a correction for wave X, and then we have ABC to complete wave Y. Therefore, this move as the first impulse could be wave 1 or A, but in this case, because wave 4 ended here, this move is therefore a wave 1, a major wave 1, and this correction is a major wave 2. Currently, the market has gone beyond the fib levels for wave 2, which is normally 61.8%. It's hit here, bounced back. Again, we had a move lower, and the next fib level that we're looking at is 78.6. In this scenario, therefore, we anticipate that the market will start reversing from this fib level to the upside for wave 3. It is therefore important to watch how the market reacts on this zone, and our invalidation level will be at the end of wave 4, the major wave 4, as that is also the start of wave 1. And the rule is wave 2 cannot go beyond the start of wave 1. Therefore, if we trade this pair after a reversal and a bullish flag, we will trade it as a long position with stops here, and our targets will be 161.8% of this wave 1. That is it for GBPUSD. The next pair that we're looking at is AUDUSD. We have been trading this pair from the wave 4, so we traded wave 5, the whole of wave 5. We're still in, and so far what we're looking at is the current move is wave 3, a major wave 3 and a minor 5 here. So we have 3 and then we have 5. So the current move is a minor 5 for a major 3. And therefore we moved our stops from this minor 1 to the end of 4 today. We anticipate that the market will touch this target 1 today before we see a reversal for a major wave 5, which might be deep considering wave 2 here was a simple correction. Wave 4 might be deep. We might see a triangle like this, probably. So what we're looking at is finishing this wave 3, and it would be very risky for you to sell now because we're almost at the target. Your risk would be bigger than the target. What we're also looking at on this pair is the possibility of it touching this level, the second target, which is the end of a major wave C. Therefore, to trade this pair, we'll be taking profits at the end of 3, waiting for wave 4, and then we can again short for wave 5. This move from when we started trading it, from the breakout of the triangle, is running at around 195.6 pips. We're still aiming at 241 pips, and the second target for 348 pips. The next pair that we're looking at is NZDUSD, New Zealand dollar against the US dollar. This pair is related to AUDUSD in that they move in the same direction more often, actually almost every time. So if you short AUDUSD, you should also, if the structures are right, you should also short NZDUSD. In this pair, we moved stops to the end of 4, similar to what we did on AUDUSD. And clearly this was a breakout, and wave 4 was the retest, and we're still on the 5th wave of the major wave 3. After that, we will be looking at a correction for wave 4 and then targeting this channel. We are targeting a channel on NZDUSD. So we will move our stops to the end of 4 once it completes the major 4 and target the trend line. Our next pair is EURUSD. So EURUSD, we have been trading this pair from here. So we have wave 1, 2, we've traded 3, we've traded 5, and now we're almost at the target. And we moved stops today to the end of this minor 4. So I didn't label that. It should be at the start, the first wave, and then we have 2, we have 3, we have 4, and then we have the last wave, which is 5. And then of course it's on a smaller degree. So we're currently trading a minor 5 to complete this move of a larger degree wave 4. Afterwards, we'll trade it upwards. We'll be buying it long term for wave 5. On the weekly, we are targeting above this channel. Should be around here. So this is the target on the weekly, which is around 1.2900. So that will be the target for wave 5 and the end of C as well. So we'll just move it here. And that will be our target once wave 4 completes, probably this week or next week. For now, we're still bearish, but it would not be advisable to short this pair if you're not already in, because the risk would be bigger than the reward. The next pair, so for this pair first before we move to the next one, from the time we entered up to this point, we are running around 165 pips, but to the target, we expect to touch at least 227 pips. So the next pair is USDCHF. And an interesting thing about these pairs, EURUSD and USDCHF, they're related but negatively. So if EURUSD is bullish, USDCHF is bearish. So on this pair, we add a major 3 and wave 4, and then we got an impulse here that completed 1, 2, 3. So this was our wave 4. And now we're looking at the possibility of a wave 5, and then we complete this move. And it's likely that this move will be truncated, because when EURUSD it's the target, this pair is not expected to be bullish long term. Therefore, it will be bearish. So what we're looking at now is the possibility of this pair breaking out from this trend line as it broke from this one. And then we will see a 5-wave move up before we see bearish moves. So today we moved stops from the top of 1 to the end of wave 4. And the market has retraced back to 50.0, and we're targeting 61.8. This becomes our buy zone all the way to the breakout, and then a sequence of 5 waves to complete wave 5. And this is how it might play out. So that will be 3, 4, and 5. So that will be our wave 5. So we'll have the first wave, the second wave, third wave as the breakout, and then wave 4 as a retest, and then a minor 5 to complete the 5-wave sequence, and therefore the end of the major 5. The next pair that we're looking at today is USDCAD, which is US dollar against the Canadian dollar. What we're looking at is we have a major wave one that completed on 19th July. We had a correction ABC as a retest on this trend line. If you can remember, this was a diagonal, an ending diagonal. This was an ending diagonal from way back. We can see it on the daily. It was a diagonal. So we add a diagonal on the daily time frame, and this is it. So we add a diagonal 1, 2, 3, 4, 5 that completed here. Now the retest was on this trend line as wave 2. So if you look at it on the 4-hour time frame, this retest here was a wave 2, a major wave 2, and what is currently playing out is a wave 3 of wave 3. So this is a minor 3 for a major wave 3, which should be here. So should be around there. So for these targets, these are just random, but we use fib levels to set these targets. So what we're anticipating for here is a breakout from this top, which will be broken by 3, a retest on that zone as wave 4, a minor 4, then another impulse to complete 5, and hence complete the major wave 3. So what we'll be doing is moving stops. And now this is the new invalidation level. So once we have a breakout, we can take part of the profits or profits at wave 3, wait for wave 4, and take another buy for wave 5. Our stops will still remain at top of wave 1, as wave 4 will invalidate if it goes beyond the top of 1. Once the market bounces off from this zone, then we can move our stops to the end of wave 4. That's it on USDCAD. The next pair is USD yen. So this pair is a bit complicated today because we have two views, and the first view is the possibility of a wave 3 from this point up, so a bullish move, a bullish possibility to wave 3, and this could be a retest on this channel, on this trend line, So that is the first view, and we moved stops here to be intact in case the second move or the next view becomes possible. So the next view is the possibility of this correction actually being extended, and instead of us having invalidation levels here, we could have it just an update. Let me show you. So we could have, instead of 1, 2, 3, 4, 5, we could have this move becoming wave X all the way to this point. So instead we will have, this is what we'll have. We will have a structure here. So we will have this kind of structure. We will have an expanding correction. So we'll have A, B, and wave C to complete X. And then we will have 5 waves down. So this is what we can expect to see. We can have wave 1, 2, we could have 3, 4, and wave 5 down here to complete wave Y, or rather C. So what we will be looking at to make sure that we are in the right track, we will not be trading this pair because we're not sure which move will occur. But in case the bearish move happens, then we will target on the channel, and the channel touches from the top or the start of the correction to wave X, and then the next line of the channel touches W, and then our target will therefore be here at the end of wave Y. So the bearish move will play out this way. We'll have it touch the channel, and then we can be bullish long term. So these are the two views of USD yen, USD JPY. So both of them are still possible, and you have seen the two views. So that's what happens when we have two views. Either you avoid the trade or take the setup that is highly likely or with the highest probability. That's the trade that you take. So the next pair that we have is the index DXY. So this is the US dollar index, US dollar currency index. This is just used to weigh the USD. And if this index is bullish, that means that the USD is stronger against the other pairs. And therefore, pairs that have USD or are rated against the USD will therefore be bearish. And thus that USD is rated against them are therefore bullish. So in this case, we anticipate that this index will touch this channel as the end of wave 4, the major 4, and the end of 5 and C. And therefore we moved stops from the end of 4 to now the end of the minor 4. We expect it to touch here, meaning that USD is strong in the short term, after which we will be bearish now for the major 5. Now, something to note is this pair moves in line with USDCHF, but moves against EURUSD. And that's why when we look at EURUSD, we have a range of maybe 50 pips to the target. And similar to this DXY, we have barely 50 pips to the target before we resume to a bearish move. And then this means that also USDCHF will only be bullish short term, and then we will resume a bearish move along with DXY. So this will help you make decisions on the two pairs mostly, and also to know the strength of the US dollar. So once it touches this channel, we will be looking at bearish moves on USDCHF, on DXY, and bullish moves on EURUSD. The next pair that we're looking at, the final pair, so we've finished the major pairs. This is gold. So we moved stops today to the top of 1, as wave 4 cannot go beyond the top of 1. And what we're looking at is we anticipate for a breakout on this trend line, and these smaller waves or minor waves that will complete a major wave 1. And currently we are in a bullish flag, which is wave 4. So we can have 3 waves here, A, B, and C, that completed wave 4, and wave 4 has not invalidated as it has not gone beyond the top of 1. So a breakout from this bullish flag will give us entries for a buy position all the way to the end of 5, and then a retest on this trend line. So if you're looking to buy, you should be buying on the breakout of this bullish flag, and your stop loss at the end of 1. And this will minimize your risk. And then once we finish 5, you could exit and then wait for a correction for major 2, as you don't want to be trapped in the correction with a buy position. And then after the correction for wave 2, we could eye to buy wave 3 long term, and our targets would be above $2,000. So that is it for our daily analysis, our premium analysis. This is the pairs. These are the pairs that we share on the daily PDF. We share invalidation levels, entries, targets, and now an explanation of what to expect in each pair. So that is it on our live analysis. See you again tomorrow, date 20 of August, to also analyze the market and see how it is playing out and what we expect in these pairs going forward. Thank you.